And let's take a look at the link versus the Bitcoins and the link versus the dollar coins. Okay, so we've had a lot of chat recently from people asking questions that, we're in price discovery mode, somebody said. Just a quick reminder to people, by the way, things are always in price discovery mode. Always. Yeah. Any trend is price discovery mode, okay? Any trend. So just, okay, I'm getting all over the place here. People have been talking a lot about how we've gone up past all-time highs. So how are we going to be able to continue to do technical analysis beyond that point? Good question, really good question. Easy to see why people would get confused about stuff like that. People then say we're in price discovery mode, which we are, right? Which we are. But also people are able to conflate the things, all-time highs, moving into new zones where it's in blue sky, and all that, and say price discovery is exclusively then. And it's true that it's then, but we're always in price discovery mode when the prices are trending one way or the other, okay? And that's the truth. So while in sometimes your price discovery is happening with historical pricing, where it's been above and below, where you're actually then discovering the price as part of a trend, is until you arrive at a consolidation point that you would say that you're in price discovery mode, which I think will help clear up a little bit of the noise for people. So yes, we don't have the support of being able to look back at the previous price action and say, here's key levels that we can look to where there was inflections in the market previously. We do not have that, but we still have all of the things that you would normally use during price discovery, during a trend, to say how things are going. So this is clearly an uptrend, right? We're in an uptrend at the minute, and you can clearly see that there was two instances here of bearish divergence on the go during this uptrend here, looking at the 4-hour time frame. That's circled here, circled here, circled here, and circled here. And the same thing is circled on the DMI. What's happened since is though we had a consolidation period here. So we're in price discovery up until this point. Then we start consolidating, where we consolidated for a day or two at this level of resistance. Doing that there is much healthier than just going straight through it. So this was a good thing, although you could have looked at this and taken it as warning signs, which it was as well. Then we moved beyond it and into this new clear blue skies, all-time highs and all that jazz. And what have we done since? Well, we've actually managed to sort of throw off the shackles of the previous bearish divergence and move up beyond it on the RSI and the DMI down below. Now, if we look over to the left, we actually see that the DMI has gone up higher than it was previously during this high here, which is on the way up. And you could make the argument to say that this was just part of the flux on the way towards this most recent of highs, and make a comparison instead of looking at this one, as we saw that this bearish divergence didn't actually play out, and make a comparison instead between this area and this area here and the most recent one. So if we just take this off here so it stops adding any bias to the chart, and instead draw a circle around this area, then you can see that there is a touch of it on the RSI, potentially should prices reverse from here. Now, it's premature to say that. It's always stupid to say it. I'm very clear when I do this. It's very, very clear. Preempting divergence is stupid. It's for stupid people. Let's not be stupid, but let's instead say that we're going to be aware of the risk of it. Okay, and instead in that, so we're not so stupid, but we can do it anyway. Now, if you are looking between the last sort of highs here on the way up to where we are now on the stochastics, you can see that they're divergent, right? And if we just remove this here, though, remove this one here from the DMI and bring the DMI up so it's big again, and then look again, you can see that this isn't divergent, right? Between we've got convergence here. This high is higher than the previous high. So what do we have on the go then? We have a little bit of a confused picture. Does that resonate with you at all in any way? Sure it does, because you've been asking questions about how we know where we're going next on these bigger time frames. Well, the truth of it is that you just kind of have to sort of just get with it. Now, there's a few things that we saw which we knew before. For instance, there is always the threat of the fake out territory here. This is where I would like to see if we have to a higher low coming in at. Well, of course, at some point we have to, right? Let's face facts. But if we have to now or soon, then this is where I would like to see it coming in at, instead of stripping on back down below this area. Going back down below this area puts us back into the realm of the previous price action. And wouldn't we all like to stay into the sort of so-called price discovery mode anyway up here in these higher echelons, So let's do that. Let's be elitist about things and stay up above this previous price action highs, and staying above 56,000. So that would be, still a fairly significant drop off in prices should things need to sort of reset somewhat, looking at a decent 5 to 6% drop down, and that might give the chance for have some more breathing room on any of these oscillators in order to continue the trend overall in general. So that could be a good enough thing if that happens, so long as we kind of stay above certain areas, right? That's what we can look to. What we can also look to as well whether or not we see exhaustion on here, and then as well what we can also look to is the Fibonacci extensions. Now, if we just get rid of the oscillators down below for a second, put a bit more price action on the chart, Have I not got any on here that are visible? Okay, I don't know. They're towards the downside. Those guys. Let's draw in a fib. Let's get rid of these Fibonacci retracements for now, right? Let's just remove them. Okay, so they've done their job for now. We can remove them. Let's just do a little bit of this chat so we can see about the old price discovery. As you can tell, by the way, these episodes are 90% ad-libbed, you know? And by the way, this is just me doing technical analysis together. The reason why I do them like this, as opposed to being sort of quite clinical about my execution of it, and that is because of for a number of reasons. One is that I want to build trust with my audience so that you know that I'm doing this for real, you know, that this is genuinely me. You can see I need to think as I'm doing it, although I speak quickly and it seems like it fits together. I still need to actually constantly be thinking constant, like what's the next thing, another reason is that I want to give you the confidence to be able to do this yourself, that every time we do one of these episodes, it's me as a spirit guide showing you how you're able to do this and rely on yourself too. So let's just do some of that then, shall we just now. So let's take out the Fibonacci retracement tool. Drawing in from the previous high, right, that we had down to the low. So this was the previously all-time highs, and this was the retracement off the back of the all-time highs, okay? Just going between these two and then asking, where do we see the 1618 coming in at? Now, this is obviously going to be quite high, okay, obviously quite high, but there is just there. Now, those aren't the only ones that you can use on the run up to it. There's a few other ones, like the 1272 is also a good one as well. And where does that come in at? Well, that's 63,000. So these are the two, can be considered to be two of the main targets towards, you know, running on here and getting a big movement off the back of this thing here. You can look towards this area and this area here. That's kind of interesting if you want to be aware of these things. So that would be potentially other profit taking targets towards the top side, as people were asking, how can you do these things? Another thing that somebody asked me was the trend based Fibonacci extension tool, you know, and if you draw a trend, if you look down here towards that area and then draw up the way towards the next one, you know, you can get in various other targets and be aware. Anyway, we don't need to look at that. I think I just did that wrong, in fact. Doesn't really matter. It doesn't matter. What we're looking at here is just this, really. That'll do for now. We can't spend all day, you know, banging on about the Chainlink to Bitcoin prices. We do need to look at other things here, but you know, this has been very good. We've done it. We've potentially thrown off the shackles of the divergence. There is the potential for divergence on the RSI. RSI would be maybe the king for divergence, but it's hard to say which one is which. I wouldn't like to push anything on anybody. The DMI you can see is not divergent, and the stochastics, well, it is. It's good. Yes. Okay. So we've covered everything there on that one. Right. Cool. Okay. Essentially, though, the trend can continue. We're looking for it to hopefully stay above 55. If it doesn't, we'll ask other questions about things, yada, yada, yada. And we could also do, I suppose, God, will I ever end? If we just do it from here to up to here, we can have a sort of speculative Fibonacci retracement on the go, saying, you know, if this was our swing low and this is our swing high, where does the 236 come in at? The 236 comes in at the end of our ascending triangle, which of course we can retrace down to and retest. That would be a good entry overall. Should we break down below these things? I'm not a financial advisor, I don't have financial advice, but that would be a good one. Should we retest off of the triangle? These things happen so frequently. The fact that we consolidated a wee bit before going up above it makes that ever so slightly less likely. But over the longer period, that's what we can look to. And if we just drag this down to where maybe you could say, what's the previous sort of where would we work, like, you know, the previous lows, it's all kind of all the way up here, then we can see how the 236 interacts with them. You know, it just simply gets lower and lower and lower and lower and lower and lower as we go down the way. So there's no point in looking at any further back in terms of things, because in terms of the Fibonacci retracements for downward price retracements now, and speculating off the back of that, because it ties in with where we have our ascending triangle and that anyway. Okay, right, so I've covered everything now. I don't need to feel bad about trying to skip on. That's why I felt bad, you know. It's like, come on, we're going to go on to the next one. We're going to go on to the next one. Same scenario here, right? Same scenario here. The dollar pricing, you know, you could look towards this area here. Let me just circle it. This area here and this area here on the RSI, and this area here, which is higher in price action but lower in the RSI, and say that we have some bearish divergence, right? You could absolutely do that. That makes sense. If we go up towards the weekly time frame, then is that visible just as easily or not? And well, looking at the RSI, you can see that we've come in mighty close and not quite done it. So from a weekly perspective, you know, which would be nice to see in a broader way, it could go up. It can go up here, and it could quite easily just catch an area up above, and over the period of the next however many days, like the next 4 or 5 days over towards the weekend, if it were to close up here, or indeed in the next week too, if it just, continues to trend up the way, let's look and see if we get divergence here on the weekly time frame to make a comparison between these 2 points here in terms of the bigger trend overall. Because overall what we have done is put in a higher high, but at the minute, if this were to close off and be a local high on the weekly time frame, it would be slightly divergent. Okay, and you can see that in relation to the price action on the lower down time frames too. Excuse me, cop car outside there. So that's a question mark. Now, of course, that's just a warning sign. Do we have anything else that's going good for us? Yes, well, you do actually. You've also got hidden bullish divergence. Now, I made a video today. I want everybody to know I made a video about hidden divergence, and I absolutely recommend that you watch it. Here's a little tidbit for you. Maybe I should have mentioned this in the video. It's quite clear from the way that we do the videos, though. You quite often get both at once. Okay, you quite often get both at once. Get a touch of hidden, which is continuation. Get a touch of regular, which is reversal. You get a bit of both at once. And this continuation divergence here is maybe the more significant thing, saying that the price actions towards the upside, maybe, but that's just how these things go. We just have to wait and see. There's warning signs left and right. Overall, compared to where we are just previously in this sort of zone, we're not divergent. This here is quite a ways back. It was over, and the point being here as well, this was overbought, and we're not made it into the overbought territory yet. Should we find a local high come in and maybe perhaps retest this area, then it would potentially be conceivably considered to be divergent, and conceivably as well in the weekly time frame you might make that case, but we'd still have to wait and see how things turn out with a potential retest of the 530 zone or whatever, and the $5 zone even as far down as that perhaps, because all of that would still just leading on to having a healthy move towards the upside. So that's really where we are right now. Things have gone very well. Ultimately, what can I say? People who've been subscribed to the channel have been able to play this all the way along for the last 3-4 months, the highs and lows the whole way along, having made a great series of trades, numerous times throughout. So what can I say at this point now? We are in the all-time high zones, but we don't need to be, as Rocky Outcrop opticians, we can at the very least give ourselves a pat on the back for having managed to make it all the way here, having done the right thing all the way along. I'm pretty sure, although as I don't lend a bias to my trading, I am very, I think, and understandable that you can actually, comprehend what it is that I'm getting at, and I do throw out clues here and there. I really try hard not to give people entries and exits. I think that teach a man to fish, yada yada. So I do that instead of giving you fishes, but we can be happy with ourselves, right? I think we can. I think everybody can be happy with themselves as well. By the way, to people out there, you can take profit whenever you like. Never worry about that. Just don't worry about it. Don't need to be told. Don't have somebody profit shame you or trade shame you. You're your own boss, your own trader. That's my last little sort of shout out to people. Just remember that what you'll find in the world, especially the echo chamber of crypto trading, is a lot of sort of it's like Wall Street bets. It's can be quite noxious at times. If at any time you feel like you want to take profit and whatever else, nobody ever went bust taking profit. You're your own man. I'm not or woman or both, and I'm not a financial advisor. None of this financial advice, and nobody out there can give you the financial advice. And really, you ought not to take it from anybody anyway. Just be your own person and don't listen to anybody, and especially somebody who's trying to sort of trade shame you. I just made up that term, but anyway, I think it's a good point to throw out there, especially when we're in the all-time highs price discovery mode. Now, there's the dangers, there's the warnings, there's the benefits as well with the hidden bullish divergence. We're up here, we're doing very well, things are great. Overall, I would remind people as well to take a look to the other markets. Go ahead and watch the Bitcoin video today, for instance. If the Bitcoin markets do drop off, then we could see a follow through effect onto other assets such as crypto, such as Chainlink. Really appreciate you tuning in. Really appreciate it. Can't say that enough. Can't stress it enough. Share the video with a friend you got one you think would like it. Yada yada. Let's move on. Thanks so much. We'll talk more about this whole price discovery shite in the future. Bear in mind as well, price discovery is any time you're trending in any direction. As long as you're not consolidating, you're in price discovery mode. Really, that would be how I would talk about it anyway. So we have always understood it. But of course, we're in raw, untainted price discovery mode when you're in the all-time highs section. And yeah, I hope that gives a bit of clarity. We'll talk about it more in the future. Thanks so much for tuning in. I'll catch you in the next episode.